What is a stablecoin? A stablecoin, according to Investopedia.com, is a cryptocurrency which has a value that is pegged or tied to that of another currency, commodity, or financial instrument. For you to understand even better, there is something called USDC, which is a US dollar stablecoin. There is something called USDT or Tether, which is a US dollar stablecoin. This means that when you give the organization that runs the platform or the cryptocurrency, you give them $1 and you get one coin. And when you want to return your coins and get dollars, there's a 1-to-1 ratio. It doesn't go up, it doesn't go down. It's supposed to represent the value of $1. Why is this important? Because regulations are coming to crypto. Welcome back to How About That Crypto, your home for crypto news, Web3 and crypto Web3 news and updates. I am your host, Bitcoin Stylist, and today we're talking about what just happened and what is on its way to happening. First, let me just remind you, this is not financial advice. You can use the links below to do your own research. Now, let me ask you this. Is it a good thing if there's regulation, or is there a bad thing if there's regulation? My argument has been through this whole time that it is a good thing to have regulation. I am very pro-regulation because I think that that's going to keep a lot of the institution money in and get more in until we have clear regulations, especially after the collapse of FTX, and especially because there are going to be bigger like institutional names and stuff like pension funds impacted. So we don't know exactly what that regulation is going to say, but if it is friendly, it could pave the way for things like pension funds and sovereign wealth funds and more conservative money managers and financial institutions and even publicly traded companies to buy and hold cryptocurrency or to use cryptocurrency in Web3. That would be amazing. Well, that's what we're talking about today. Please remember to like, subscribe, follow. It really helps support the channel, and it makes sure that this information gets in front of more people. The more people that are paying attention to crypto and in tune with it, the better, I believe. All right. So I'm going to dive right in, and I'm going to share my screen. If you're listening on podcast, you can just listen up. And let's see, share screen. All right. So what I've done is I've pulled up an article by Bill Bambro, a senior contributor at Forbes magazine. The article is titled "Grave Mistake. Joe Biden reveals game-changing crypto roadmap after $2 trillion Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Polygon, and Solana price crash." You think they did that for SEO? So all of anybody who looks up that coin and the word crash, do you think that's pretty funny? Anyway, let's go ahead and move down here. I'm just going to read a couple things from this piece. Okay, so it starts off with talking about basically Joe Biden came out. There's a statement made. White House is signaling what they wanted, what they're planning on doing, where they want to focus, and how they feel about cryptocurrency. Check this out. In the past year, traditional financial institutions' limited exposure to cryptocurrency has prevented turmoil in cryptocurrencies from infecting the broader financial system. 4 senior U.S. officials in the Biden administration wrote in a statement urging Congress to step up efforts to regulate the crypto market after a number of crypto bills have been introduced. So if you've been paying attention or watching the show, you know that there's a number of bills that had been put in front of Congress. How I also did interview George Leonardo from Cap Hill Crypto, and he specifically focuses on federal policy and on cryptocurrency. So definitely check him out, and then check out our interviews. He came on and was telling us, giving us a little update and insight to the politicians, the lawmakers, etc. And like we got a chance to really understand what different bills are out there, and there's a relatively positive vibe. But then FTX crashed, and it still seems to be relatively positive, but you're always still concerned until something happens. We're cautiously optimistic here. Now, this is Joe Biden and his White House administration saying that they like the fact that traditional financial markets were limited to the exposure of the collapse that happened, and that they want Congress to step it up. They have multiple bills, so like get to work. Well, that's what I'm saying. And it goes on to say it would be a grave mistake to enact legislation that reverses course and deepens the ties between cryptocurrency and the broader financial system. So that is not good. Okay. So I don't like that. That sounds like they want to keep it separate. Okay. Even though this article continues to go on and say this is widely viewed as a positive move, but enacting legislation that reverses course and deepens ties between cryptocurrency reverses course. Well, the only course they're on are traditional financial institutions limiting exposure, and they're probably limiting exposure waiting for legislation. So what is this legislation going to be? So that's how I read this. Do you read this differently? Please let me know. Leave a comment below. I'd love to hear from you. Okay, here we go. Legislation should not greenlight mainstream institutions like pension funds dive headlong into cryptocurrency markets. White House advisors Brian Deese, director of the National Economic Council, Arati Prabhakar, director of the White House Office of Science and Technology Policy, Cecilia, basically all these people that report to President Trump. Sorry. Oh my gosh. I hope I didn't offend anybody. All these people that report to President Biden, and they're saying they don't like this, like moving into the financial markets, and they're taking a stab at Fidelity offering crypto in Bitcoin, specifically allocations in 401ks. And Elizabeth Warren really didn't like that and spoke up. So she's clearly making headway by talking to these people. Anyway, so and then it goes on to talk about how Congress should expand the powers of the SEC, the CFTC, bolster transparency and disclosure requirements. I'm totally down with that. If you got a problem with that, please tell me why, because I think that's ridiculous if you got a problem with that. Increase funding for law enforcement. Yeah. And pass so-called stablecoin legislation. They advise following more blah, blah, blah. Okay. So basically what it sounds like is they want more money to the feds, and they want to expand the power of regulators, and they want stablecoin bill. Now, I thought that was interesting because I'm going to switch screens here, and I'm going to kind of just pause for that for a second. There's this place called Moodys Corporation. It's an American financial services company that acts as the holding company for Moody's Investor Services and Analytics. So basically, Moody's Analytics develops. Okay, so that's not a good definition. All right, Moody's Corporation is a holding company that owns both Moody's Investor Services, which rates fixed income debt securities, and Moody's Analytics, which provides software and research for economic analysis and risk management. So basically, they are the ones that were rating the mortgage-backed securities as good, even though they knew they were bad. If you don't know that, watch The Big Short. Not that that's like a historical document, but that's what they allege in the movie, that these risk rating agencies. So not sure that that's like something that crypto folk will be excited about, but traditional finance folk, I do think they will be excited about seeing someone like Moody's, who they rely on for risk, for calculating their risk, to be out there. And what are they going to be doing? It says, according to Nelson Wang and CoinDesk, Moody's developing scoring system for stablecoins. The move comes as the quality of stablecoin reserves continues to receive scrutiny. And it goes on to say Moody's, which among other things provides credit ratings for publicly traded companies, is working on a system to score up to 20 stablecoins based on the quality of the reserves attestations. So Moody's is one of these companies that says, oh, that's a, AAA rating, or, B rating, or, it's junk, it's high quality. And when they're talking about debt and businesses, so now they're going to start rating stablecoins. Now, this sounds like a very close tie to what's happening in the White House. So it looks like things are churning around. So I thought that's a positive. What do you think? Do you think this is a positive? Do you think this is a negative? What are you most excited about in 2023? Let me know. Leave a comment below. Have a good day and hodl on.